Hello, hi everyone. Welcome. This is episode 10. My name is Shahar Friedman from Utila, head of payments. This is episode 10 of Stablecoin Builder Series. This webinar is a monthly live session for founders, entrepreneurs, and operators building products in the stablecoin space. We cover topics for projects at every stage for growth, from idea to funding to shipping. We run these sessions to help the stablecoin ecosystem grow by tackling real infrastructure challenges together. Just some housekeeping before we'll get started. Please drop your questions in the chat throughout the session, and we'll address them as many as we can towards the end of the session. I'll be your host today. Like I said, my name is Shahar Friedman, head of payments at Utila. Just a bit of quick intro for those who are new to Utila. Utila provides fintechs, banks, and enterprise with infrastructure to build and manage stablecoin and digital assets operations. We serve over 200 institutions across payments, treasury, and more, and we help secure over 20 billion in volume every month. We have an exciting topic for today, one of the fastest moving topics in fintech and payments, which is agentic payments. AI agents are rapidly evolving from assistants into operators capable of executing tasks, coordinating workflows, and increasingly moving money. We'll discuss how fintechs, payment providers, enterprises, and AI builders are approaching agentic payments and the role of stablecoins, programmable wallets, policy controls, and security in making them possible. Before we get started, let's just do a quick round of intros. We have some great guests here today. Catherine, why don't you get started, please?
Hey, sorry. I think our head of product was slated to join this call, but she's sick, so it'll be me instead. My name's Catherine. I'm a product manager at Rain. I've been working on agentic initiatives. And prior to joining Rain, I'd been at Visa for 6 years. The last product I worked on was Visa Intelligent Commerce. So really excited to gather and continue the conversation on agentic payments and commerce.
Thank you. Thank you for joining us. Brandon, you can go next.
Yeah, of course. Hey, everybody. I'm Brendan. I work at Tempo Labs, and I lead engineering for a lot of our AI adjacent initiatives, including the machine payments protocol. Previously, I worked at Stripe for about 6 years on a variety of products, cards, cryptocurrencies, our consumer offerings. So I know a lot about payments and a lot of credit card fun facts. James.
Awesome. So great to meet you all. So really excited to dive into the agentic payment side. So my name is James. I joined Polygon Labs around 6 months ago in an acquisition. And really, we've been focused on building out what we call the open money stack. And I also lead the agentic payments initiatives here. So that's everything from like hands-on engineering, everything to distribution and making sure we can accelerate the growth of agentic payments.
Amazing. So yeah, thank you all for joining me today. So like I said, tonight is strictly about autonomous execution. We're focusing on AI agents that hold wallets, sign transactions, and move money within human-defined guardrails, completely eliminating the click to approve step. Maybe let's start with kind of like more of like general question on why are agentic payments becoming a reality. Brendan, in your view, when you look at the AI agents, how they evolved quickly over the past year, why are payments becoming actually the next frontier for AI agents?
Yeah, that's a really good question. I think it's definitely the next frontier, but still extremely small today. How I think about it is payments are ultimately like a transfer of value for something being done between two entities. And I think it's really natural that I think as we've found agents, AI systems becoming much more capable and doing much more work on our behalfs, there's going to be value translated somewhere there. So today, like I think of the common use cases like people just buying sneakers, people like buying physical things. I think that's probably the least interesting. And what I think will become much more prevalent and what we're really excited about is agents buying services, items to improve data, to improve their output, and doing that dynamically. I think it just shifts everybody's very used to this translation of, okay, I can spend more money to get GPT-5 to think longer and just burn more GPU cycles. But what is the second axis is, can I spend more money, but also get XYZ tools that might cost money because they're providing value, but get you a better answer statistically than just thinking and spinning GPUs for a longer period of time. So I think it's a really natural point. We're very, very early, but really laying the groundwork right now.
Cool. And Catherine, if we look at financial workflow, so you've come like the experience in RAIN in this domain. So which financial workflows are most likely to become autonomous first in your view?
So that's an interesting question. I think Brandon touched on good points, right? Like what we're seeing right now are the workflows that are well defined are the ones that are first to be automated. In many ways, that's natural. Those are the types of purchases that we commonly see today conducted over the internet. So maybe it's from a consumer perspective, like booking travel, making purchases of physical goods, wherein like the consumer has fairly well defined criteria for what they're looking for, and they're just passing the instruction to the agent. For more commercial payments, right, there's sort of like I said, the automation of what is sort of like regularized or well-defined. So vendor payments are a good example, and where we're seeing that there's more experimentation, right? But I think like less formality and consistency in terms of like the what's put in practice by our clients are the agent-to-agent payments, where we're seeing agents can make purchases of like data, compute, and so on from other agents.
Understood. So let's talk a bit about like why stablecoins for AI. I know that if agents are going to transact, obviously they need money that behaves like software, right? So let's talk about maybe why stablecoins, programmable, instant, always on, keep coming up as the natural rail, as opposed to maybe traditional card rails or banking rails. So maybe let's spend a few minutes about that. James, would love to get your view. Like, why are stablecoins particularly better suited for AI-driven transactions? What do you think?
Yeah, I mean, to reiterate what everyone's kind of hitting the nail on the head. And I think we're all pretty well aware of this. Of like, stablecoins are programmable. They're API native. So whether you're using MBP or X402 and all AP2, all these different protocols that are out there, an agent already treats like search and code execution as like a callable interface, and agents can reason about this in a very seamless way. And payments for agents has to work a very similar way. So like, Catherine also mentioned a bit about like, the microtransaction side of things. So you can have very minimal fees, in fact, like no fees by just signing a message. And then these different protocols can pull this out of your wallet in a very seamless way. So this enables you to have these microtransactions and have an agent actually work autonomously for you. So I think as we get more, and I'm sure most of us, since we're in this space, we're already seeing this like, okay, you were prompting an agent. It's like a one-to-one bidirectional relationship. And then you start looping different behaviors that you're working on. And then you start kind of abstracting yourself more away. And as you do that, I find more and more I want to delegate more capabilities and policies to my agent. And stablecoins are naturally, because of their programmable nature, allow you to encode these kind of like policy decisions or session limits in a way that's native to stablecoins. I have seen people do this with like card rails and things like this, but originally they were thought of for tuned for human consumption as opposed to like with these different form models.
No, but actually touching on your last point, and Catherine would love to hear your view, because I also worked at Visa, so we share that background. So why actually can't the autonomous transaction be executed by traditional payment rails, right? We know we have card scheme tokens, which they've been a lot in that infrastructure. Why actually they cannot be used for agent payments in view, or maybe they can. I mean, maybe we're just kind of like already like assuming that like stables are the right answer. But what's your take on that?
That's an interesting question for us. Like, I think there are many points of access for stablecoin payments for us here at RAIN, right? We're our flagship product, which is the stablecoin settlement for card as the payment instrument, allows the agent to go to any merchant, right, to make any merchant which accepts the major card networks to make a purchase. And so for us, like in terms of thinking about sort of stablecoin payments more broadly, we're thinking about the adoption from the merchant and acquiring ecosystem. So cards as a first step makes sense, right? Because they are familiar. They're not requiring a lot of changes for merchant acquirers to adopt and facilitate those payments from agents. But as was mentioned before, like I think there is an emerging class of sort of like new acceptance points that come with the rise of maybe agents as a recipient of the payment, right? Where they might want to use different primitives to accept payments. And in that case, maybe different instruments, different protocols might be used. But at this point in time, like we said, in terms of the payment flows we see that agents are executing on, they are fairly familiar, like maybe purchase types, especially when we talk about the consumers, right? Buying the sneakers, booking travel, where, the merchant's current acceptance point is going to be card, a more traditional method, which we can adapt for agents and also for stablecoin settlement.
Got it. Brandon, and anything to add from your point of view on like any advantages on programmable money and like the instant settlement or anything that you would like to add on this specific point?
Yeah, of course. I think the biggest things, and like I think there's two parts of like there's the interface level of like what does the payment interface look like, and then there's like the underlying rail. And I think there's going to be a lot of payment methods. There's never going to be one payment method. It'll be cards, it'll be crypto, it'll be Klarna, it'll be closed loop wallets. But ultimately, and the interface will likely be the same. It'll be like something like MVP or X402, but the rail underneath it is where I think like stablecoins really uniquely shine in that they can, one, settle instantly, which is extremely powerful. Two, they are inherently machine native. So if you look at even like Visa's agent, like transaction protocols, like stuff for identity, they all involve holding K1 private keys, which inherently, like if you're signing for identity, if you're doing all these other things that happen in payments now, like real robust payment flows, it boils down to kind of the core principles needed for crypto and needed for stablecoins. So I think there's a natural tailwind there. I think lastly, like the biggest tailwind for open programmable money that settles instantly is actually just the inherent open source nature of it. And it's very easy to write flows, to digest data. It just like it's building on years of research and just like open source development. And I think that does get a little rocky in the short term, but long term, that just gets increasingly pulled into model training data sets. It's easier to automate, it's easier to work over. So there's natural inherent advantages there versus like payment methods. Like I've read the Visa spec many years ago now, but it was like 600 pages. Like, and you need to get access to like Visa portals. You need to download that. Like that's not showing up in the GPT-6 training data set. Like the even PIX, even UPI, like if you try to onboard onto those, you can't. What is the most accessible, instantly settable rail? And it's only growing quickly. Taking a real bet there on stablecoins.
Understood. Cool. Let's talk a bit about infrastructure, which is, I think, very relevant to, I think we have in the crowd here today, like, fintechs and a lot of builders. So I think like infrastructure is really key. And I think amongst us here, each one of us kind of like, plays a different role and kind of like in the ecosystem and what we bring in essence to kind of like, to enhance stablecoin distribution and the overall industry. So let's talk a bit about infra. So James, starting with you again. So essentially, what does an AI agent need actually before they initiate a payment?
Yeah, we love infra over here. So there's a lot of things that an agent needs, and to me, I boil down to like three core things. Specifically, on like initiating a payment. If I'm being honest, I think there's a lot of ancillary things like discovery and a lot of other things. But really, an agent needs identity, authorization, and then ultimately like execution in order to execute that payment. So as Brendan was mentioning, like there's different identity standards out there. There's different ways to like validate an agent. This can be as simple as it just has a wallet associated with it, a very trivial thing, or like ERC-8004, which is like an on-chain identity instrument to discover different agents, or it can be it's modeled as an owner actually is associated with this agent in some way and goes through a KYC process. Authorization means like you have a machine readable policy in some way. So I think this is really important because of, there's prompt injection attacks. I think a lot of people, when agentic payments started getting bigger and bigger, they were especially worried about delegating any significant amount of funds to their agent beyond play money, because how could you guarantee in a cryptographically verifiable way that you wouldn't be prompt injected and it would just send your assets to somewhere else? And then the third is like execution. So when you actually want to make a payment, how can it actually execute it, and how does it enforce your policy that you actually set up? And I know like everyone here is working on some different models in order to like work through this. But I think those are like three core things of infrastructure that really is foundational in order to have agentic payments take off in any meaningful way.
Got it. Brendan, what do you think in terms of AI applications and payment infrastructure? So essentially, how should payments infrastructure evolve for AI native applications, right? We have very robust, payment infra today. So how do you see that kind of like those world converging, or the evolution which takes place on the current payment infrastructure to cater for AI native applications?
Yeah, I think the biggest thing is just faster, cheaper, and more accessible. Like just continuing that trend that technology just over time always becomes faster, cheaper, and more accessible. And we're seeing like, okay, there's this large explosion of productive work, actors taking productive work, and how do we make payment infrastructure like it's going to be stressed in a lot of ways that it hasn't before, of many more transactions, many smaller transactions, and like most importantly, like a large turnover in the population. Like I think the big difference here is like Visa issues how many cards a day, they're issuing credentials, but they're issuing them to humans. What if you need to do that over potentially thousands of agents and millions of sub-agents, and like that number just like continues to compound. So I do think there will be a flipping point of when agents overtake human activity in terms of like actual raw number of transactions. And I think that's the very interesting inflection point where things that are very low friction to get started, things that are very quick to onboard to, and things that are low cost are inherently going to win. And I think you see this in like many, many other places in the economy. Like if you look at like the services that are growing the quickest, because of even like agentic coding today, it's like the Vercells of the world, the Stripes of the world. And why do they do that? It's because they have instant onboarding and you can just get started. And you have to ask like, okay, if that holds for software businesses, which is the main use for agents today, like coding agents, how does that translate to payments businesses? And I think it's the exact same thing. It's like,
so removing friction essentially. Yeah.
Exactly. It's just naturally removing friction, being open, and having lowest cost that's kind of like the arc of technology over time. And I think that's like rather inevitable.
Cool. So moving on to the next topic, and I think actually this is one of like again of the most important topics. So if can, which is maybe the heart of it. So if an agent can move money, the question isn't just can it, but who let it, right? So who gave it the authority? How much money? How does it control? What happens when it goes wrong, right? Let's say I told my agent to buy me red sneakers, and I got like a green pair. Like who's liable? What went wrong? What's happening? It's just like a simple example. Obviously, it can be a much bigger magnitude. So let's talk a bit about delegated authority. I mean, it sounds like heavy, but I think it's really like a core element, because like there's element of trust, right? So today we use Visa and MasterCard, our bank, because we trust them. So I think it's a very important element when we talk about, agent to agent payments, agentic commerce, like, the element of trust and security. So let's spend a few minutes about that. Brandon, starting with you. Should AI agents even have like direct signing authority? What's your take on that?
Yeah, I think 100%. Like, I think it feels like translating this from the software world as well. It feels like just last year we're having the debates like, should people be running like agents in production to debug stuff or give it like production database access? And I think like we've seen increasingly people get a lot more comfortable with that over time, just as the models have gotten much better at specifically like rule following, instruction following. They're very good at tracking original intent and have a lot of safeguards there. They can still get confused. Stuff still does happen, but I think that's improved a lot. I think there's two ways to look at this. Is one for like these low, if we're talking about like, there's two types of agentic commerce I see, like these like low cost, like very high throughput things, like where you're paying cents, 1/10 of a cent to get data to do like stuff at a very high volume. I think a lot of like the access control debate there is that just won't happen because if you're interacting with a service that is fraudulent, like it's economically rational that the agent would just stop interacting with the service, and maybe you lose 1/10 of 1 cent. Fine, it's way better than like mediating disputes, which are an incredibly costly process, even on the card networks. The second is for like physical commerce. Like, okay, maybe in your example, I want to buy a pair of shoes. It was green instead of red. Then it gets a little trickier. And I think what we'll see there is one, like controls, much like my mental model is, it's much like giving an employee a corporate card. Like, I'm giving you a corporate card. I'm trusting you like when you're on travel to spend it within like XYZ parameters, but I'm not like looking at every single thing. But in the cases where there are disputes or maybe misalignment between something you told your agent to do and some actual transaction it took, then I think we'll see like this kind of convergence of one, the existing payment networks rules, like Visa's rules, et cetera, just parlayed on top of, okay, can we get traces from the agent harness, show what it was doing? And you can kind of actually build a much tighter dispute process than today. If you've ever disputed anything on a card, it's like, hey, this is what I did. You have to send a bunch of emails. It's a ton of back and forth. I think you can actually just like augment that existing process. It's the exact same process, but attach traces from Claude, traces from ChatGPT. You can just pull all of that data much easier.
Right. So actually, you mentioned like corporate cards, and again today, like again, if a company wants to give its employees, there's like different systems, provider, everything's like controlled. So Catherine, when you think of organizations, how should or what should organization actually think about delegated authority when it comes to like agentic and AI payments?
I think you've given a little bit of the answer away when saying delegated authority, which is to say, in terms of permissions that are granted from AI agents, it needs to be traceable to sort of a specific like person, right? An owner of the fund ultimately is able to take the initiative, right, on liability or open disputes where relevant. And then that also is related to that individual's like risk appetite. I think that varies by context. In a corporate setting, looks very different from or a corporate or commercial case that looks very different from a consumer. And so there's a level of customization that I think is appropriate in terms of making sure that whoever is performing the delegation, right, like I said, is ultimately able to find recourse through liability and disputes if relevant. So those are sort of the guardrails that we're thinking about. Obviously, it's possible, and it's been mentioned in this call as well, to make sure that the delegated authority is sort of bound with the credential itself. So I think enforcement is one of those themes, making sure that it's programmable, so that it's based on antecedent versus, I think, disputes and liability for so long has been such a pain point because it's so reactive and because there's limited information to sort of confirm the course of events and perform arbitration like with I think like precision and confidence right after some time has passed. So those are all things that we're thinking about in terms of delegated authority, is just making sure at the moment a purchase takes place, right, you have an accountable stakeholder who is like approved the agent to spend, who's represented by the agent, and that there is sort of a path in place to prevent or to correct any issues that may arise where the agent sort of makes an interpretive error, or there is another security concern has also been explored in the call prior.
Got it. So James, do we even need humans, right? We're like, should humans like remain in the loop? You can take this question to a different direction, but no, like seriously, like where like we spoke about like these flows and agentic, like where's like the kind of like the human touch and what we've discussed so far.
I mean, so far we still need humans to do webinars like this. I mean, so we're still yeah. But
not human.
I mean, seriously, on the agentic payment side, like I think at least for the foreseeable future, there's going to be humans in the loop.
Sure.
I say, like similar to what the other speakers discussed, is like whenever you set up these guardrails or policies, however you'd like to define them, that will primarily be the designation of humans. Like they should be responsible depending on the context and depending where the agent operates, B2B, B2C, etc. They design the policies, whether these are spend caps or certain categories they can actually access or different counterparties they can actually interact with. What is refund policies and so on. And then humans are responsible for reviewing exceptions to that and what is the escalation policies that an agent should kind of tag you in. So it's similar, like if you're programming on like Claude, it does a little flash just to get your attention. I think we'll be more and more tagged in the loop. Longer term, I think that probably gets abstracted even more so once, businesses and consumers become more friendly with kind of the scope of like what an agent can do. But I really see that ultimately, like agentic payments will, at least in the consumer context, will take off where the thing I want to purchase is very deterministic and it's hard to make mistakes. Like in your example, for green and red shoe, it could easily make mistakes. Like if I go on Nike, I can see 1,000 red shoes, but if I go grocery shopping, as a random example, this is fairly well defined. If I want to buy bananas, maybe if you go to a fancy grocery store, maybe you got 3 or 4 bananas, but
organic, non-organic. Yeah. Cool. So far, like everything sounds good. So I want to actually scare the audience a bit. So, what are the security risks that you see in agentic payments? I don't know who wants to jump first, or James, or Brandon, or Catherine. Any takes on security risks? I know we're not security experts per se, but we would love to get your feedback.
I mean, I'll touch on the main one that I pointed out earlier. I think prompt injection is still worries me, and I think you don't have to go far to go on X and see all these agents running around and seeing how people can exploit them. Even ones that have like session policies and session limits and a lot of guardrails around this. So these will continue to evolve, but it's kind of like that never-ending race. Is you create a new model, the model can exploit security vulnerabilities better, so you need a better model to detect your code to actually guard against those. So you're kind of in this arms race, but that's like a simple thing that needs to be well thought out and continually iterated on to have something that's secure. So I would say like that's one of the top things that's top of mind.
Cool. Anything to add on that from your side, Brendan or Catherine?
Yeah, I think to build on that, like the most exciting thing, and like I think like the broader population just became aware of this like over the last few months with like Claude, Mythos, other models, but this is something we've been tracking at Tempo really since February. Published a big paper of OpenAI about software level exploits, especially on open finance. Like the core really like headwind here is inherently agents and programmatic systems are much better at exploiting issues and finding them than proactively fixing them. And so there's this inherent imbalance of it's much easier to exploit things and abuse systems than proactively discover areas where they can be abused. So I think that dynamic is going to evolve not only for software with like increased security hardening, a lot of like proactive pen testing, but also on the payment side, where, okay, I think there's like this cliff almost of it becomes very rocky for like open systems in the very short term, because everything is so open. It's very easy. I think like anybody who runs open source program today like sees like there's just a huge number of bug reports, a lot of them AI generated, a lot of them very useful, a lot of them also like not very useful, but good signal regardless. And that is going to become a little rocky in the short term, but over time, like by virtue of being open, these systems get much more hardened, much more secure, and that inherently will help them a lot versus the large closed payment systems of the world, which have to bear all of this cost, all of this coordination themselves, to harden themselves against what are really like the same risk vectors.
Got it. Cool. So moving on, maybe to lighter topics compared to like the info that we discussed. So switching gears a bit. So talking about like actual frontier agents paying other agents, no human in the transaction at all. Maybe we can separate on like what's real and emerging and what's like more like futuristic and science fiction, and what does kind of like identity and trust and how it kind of like works together. So Brandon, to continue with you, maybe what do you think? Like, will AI agents actually transact directly with other agents?
Yeah, totally.
Totally.
I think it's happening, and it's happening today. And like, I think we like larger, we might be like big braining this one a little too much. Like, I think like an agent transacting with another agent looks like just like some software system buying from another software system. And what that looks like today is even like the simplest case, it might be me giving my credit card to Claude, and then Claude checking out on a merchant which has a Stripe payments webpage. And like an agent which needs to process money, like they probably have the same legal domain, the same structure, they're running on behalf of a business, they're going to have their own Stripe account. So it's just, to me, it's going to look like I have this computer system interacting with this other computer system, and we actually have all of that plumbing today. I don't think we need a ton of changes there. It just looks like an interface problem of like, okay, my agent could put this credit card into this payment processor, and all of those pieces exist today. I don't think there's like a huge agentic side on the seller side, because it just looks like an API. It just looks like some programmatic interface. So I think like from that respect, I see it today. I'm very excited about it. I think it's like really inevitable.
Yeah. Even though again, there are some nuances again to come like that merchant agent, because again, this is something that I also worked after Visa. I worked at Wix, which is a website builder, and again, we're also doing some cool agentic payments projects with Stripe and PayPal and other companies. And there's a lot of nuances, like what if a merchant has like a special refund policy or like things like that, which needs to be kind of like also embedded in the flow. So I think there's still some work which needs to be done in that regard. But I definitely get your point. In terms of like identity and trust, James, what's your take on that? Like, how should that like work when it comes to like to A2A payments?
Yeah, good question. I do think it's very interesting when you're buying like SaaS services, or just like you're communicating with AIs or APIs, and an agent kind of hosts this behind the scenes, and they just communicate directly. I think it's pretty well built out already and working, to my knowledge, fairly well. I think we could do some stuff on the discovery side, just to like have a trust and like ranking layer associated with this between a lot of different discovery places. I think that's the one thing that I find is kind of missing is like a aggregated on-chain identity layer. So like I kind of mentioned, I have to know where all these different agents or services live in order to find them and actually use them. And even though I can plug into different like skill files, or people host them on like external services or APIs, it would be great if my have some kind of ranking of like what are the best endpoints for my given use case. So I think this comes down to it a lot. But essentially there needs to be some kind of on-chain or even off-chain identity instrument or registry model, and the agent knows how to check and validate against this registry model, and then carry this reputation as it moves between different stuff. I think it gets really interesting when agents start doing more like almost negotiating between each other. Then I think it becomes like a much more interesting business relationship versus this is priced in 1999 or this is a microtransaction. And then I think identity in registration really becomes like paramount of, do you trust the agent even though maybe you don't even know the identity of the person who's operating on your behalf?
Got it. And Catherine, do you think, like in terms of like beyond the trust, any additional, you think, infrastructure or building blocks that we kind of like we still need to build to enable kind of like an agent to agent flow?
I think there have been some really interesting points raised so far, like agreed, I think in terms of the plumbing or the payments capabilities, they largely exist today. We've also talked about where are the constraints in terms of delegated authority when it comes to, sort of like equipping agents to make payments on human users' behalf. Between agents, like discovery of a reputable agent, the quality of the service is fairly important as well, just as much, if not equal to, sort of like safe handling of the payment or the funds themselves. So mostly, I think these have been covered.
Cool. Let's talk a bit about like new business models, right? Because essentially, every like new payment shift revolution potentially creates like new products that couldn't exist before. So we can get a bit like speculative, but also grounded. Like really, I think really interested to hear like your views on this topic. So, Brandon, starting with you, any fintech products that kind of like, you don't have to like reveal any secrets, but any fintech products that you think become possible now with agentic payments that so far are a bit more difficult to envision?
Yeah, that's a great question. I don't think on the fintech product side,
Or is it more kind of like just
yeah,
creating an ecosystem of our fintech
yeah,
as we know it today, right? Banking, loans, etc. But on like on a new infra, maybe that's, I don't know, like that's the take.
yeah, I think I think like the most direct thing and the thing I'm most excited about is like, I think there's going to be just a mass, like the net new business models. Like today we're seeing this transition of like, okay, existing businesses making themselves legible to agents, making themselves legible to agentic payments. And there's a ton of excitement there. I think the next wave is almost like, okay, what are the businesses which from day one cater almost only to AI agents and AI buyers? And I think we're going to see like an increasing number of these. And I think what this shows up as is software first, like API first businesses. They're providing data, they're providing services. Like in the case of fintech, this might be risk scores, this might be banking data. Like you mentioned, like, okay, what is a permissionless plaid? There's like this whole data industry for risk signals like Sardine, et cetera. And what I think Claude and like the mass proliferation of coding agents also enables is, while these businesses were very hard to build before, even like 2 years ago, they're very easy to spin up now. So you're going to see a lot more competitive marketplaces for, okay, maybe today there's like 10 risk signal providers. Maybe tomorrow there'll be 100, and there gets to be 100 because a little bit like what James spoke of like, if you have better discovery primitives, you can say like, okay, these services were providing this level of like good or service behind this programmatic interface. They're capturing this amount of economic flows, and you're just going to get a really competitive marketplace there. Okay, if I see that this maybe like people data enrichment service used by salespeople is getting a ton of volume, I'm going to also try and build a competing data enrichment service and plug into a similar interface, make it addressable, and we're just going to see a lot more competition there. So I think that's the thing I'm most excited for. And I think there's a lot of parallels there with existing fintech services, which are machine readable, like risk insights, other things there.
Cool. James, what do you think about treasury operations? I mean, in general, as I see kind of like, the industry today, like, it's like even like putting, agent to agent or agentic payments, like just their general stablecoin adoption, like treasury is still, it's like at the infancy, so like very early days. But if we try maybe to, to think ahead, like on treasury operations and global money movements, like how could that potentially change, based on agentic payments and commerce in general?
Yeah, we actually, working on this quite a lot. So I'm personally excited about a lot of these like B2B aspects, or especially just making money movement more effective, especially for like, treasury, which is generally a slow moving process. So what we've kind of seen is like generally like for treasury operations, like the day to day is periodic. It's generally at the end of the day reconciliation. There's like batching involved, and there's really like a fixed schedule that they maintain according to like the policies that they've set up. And I think as like agents get more involved in like treasury operations and management, the agents will just monitor the balances in real time, and then they'll settle against policies that are already set up instead of someone just running a script in like at the beginning of the day, or a whole team doing this. So that's one part of it. And then the second part is like the reconciliation side, because you're reconciling these receipts in a continuous format then. So agents can just basically optimize the entire treasury management pipeline in a much more effective way. So I think this is a really common thing that we're seeing across the board, is that like they're just getting more value out of their assets and capital. And so ultimately, the people that we're working with, we kind of see a big shift of the day-to-day treasury operations is being abstracted. And then what I said earlier is now the focus is how do you create the policies and how do you embed those into agents in order to have that more autonomous and like kind of go more hands-off over time. So that's becoming more of the product of like designing the treasury policy and how you do this in a safe, secure, scalable way. That's a big focus of ours right now.
Very interesting. Catherine, looking more kind of like on the acceptance side. So, what do you think are the opportunities for PSPs in this space?
Sure. I think there are so many opportunities. We've talked about it before for merchants and acquirers. Some of the key decisions they're making for agentic commerce is the type of interface, frankly, they support to accept payments from agents. In some cases, it is fairly traditional, right? It's card payments. There's a UI, and the agent is browsing it very similar to a human user, but there are emerging protocols that are more sort of like machine native. They're based on APIs, right? X402 being a good example, and PSPs making that sort of transition or opening that opportunity for merchants to accept payments through those new protocols is one of those opportunities. With it comes probably engendering like a transition for some of these merchants, especially in software compute, to maybe experiment with and adjust their monetization model, right? Instead of seat-based, be practicing some form of usage-based billing, for example. I think it is one of the sort of like business premises behind using or accepting like X402 payments. There's also risk controls, of course, like supporting the merchants and acquirers to sort of like manage or accept payments that come from trusted actors, as malicious bots, right? Maybe that is some level of like access to the delegated authority, the policies that are sort of like we talked about, have like equipped the agent to spend on user behalf. And then stablecoin settlement, right? Ensuring business continuity sort of across different rails that are used in payments, like to ensure like accounting operations, order fulfillment, inventory, et cetera, like are all properly integrated, regardless of the interface, regardless of fiat or settlement rails, or fiat or stablecoin settlement rails.
Cool. We'll wrap this segment just with the last question, on which I'm curious to hear your thoughts about industries. So, which industries kind of like are likely to adopt this first? We can do like a round. Brendan, what's your take on like industries? Who's gonna kind of like adopt first?
Yeah, that's a really good question. I think it looks like two very different things based on where people are. So like on the physical commerce side, it looks like a lot of these like large aggregators. You see a lot of excitement here with Shopify, with the Amazons of the world. Like they have these massive catalogs and they want to make them addressable to ChatGPT. They want to make them addressable to Claude. They're doing this through things like UCP, other protocols, and I think that's the biggest source of adoption for like physical commerce is just these large platforms today, because quite frankly, they're software native already. And they have just like, there's the compounding benefit of navigating this new technology where like, if I'm a small shop, I run my own website, like I'm not going to make myself machine addressable maybe today, because it's a super high lift. There's a lot of complexity stuff moving around. I think on the other side, and this is what we're really excited about, is these like software data businesses, like data feeds, APIs. What we see there is like really three distinct things, especially with MPP, is like at the top of the funnel is like API-based services, like the Parallels of the world, which you can sign up for, you can use the API key, but they want to increase their top of funnel. So they add MPP, they add things like X402, and they have a traditional UBB-based billing model, but they just want to increase top of funnel, make themselves addressable. The second is MCP servers. Like MCP is this really interesting thing where it is very useful, and we've seen like a huge number, like a proliferation of services. People are still figuring out what is useful, but beyond that, just the monetization model of it is incredibly unclear, and there's not super good primitives. And the reason for this is, okay, this is this service, you just plug into Claude, you plug into Codex, and you're getting value from it on like a per tool call basis. So it looks like UBB, but there's no natural billing interface. So everybody's trying to figure that out. Do you do API keys? Do you like subscribe to these things? What does that look like? And we're seeing agentic payments like pay per tool call become via MPP become like a really useful primitive there, just because it solves like a really real problem. And then lastly is like content providers. You see this with like pay per crawl by Cloudflare, other initiatives. AWS has one too. And this is a really interesting one in which, okay, where it might have been just impossible for me to like pay 1 cent to view a Bloomberg article, not one, because like the minimum cost of cards is high, but more importantly, I just don't want to click the button that frequently, while agents can click the button that frequently. We're seeing a lot of excitement on traditional content publishers on saying like, hey, to access this service in maybe a more efficient data encoding format, more suitable for agents, we will charge you 1/10 of a cent, 1 cent, and do that on a pay per request basis. And that's probably the last place we're seeing a lot of excitement with MPP and like similar agentic commerce tempo.
Cool. James, Catherine, anything to add on that, or we'll move to the final section, which is more on the practical side. So if someone in the audience, actually they want to ship this, they want to build a product, what's actually stopping them today? What decision do they need to actually take in order to get started? So essentially, like, topic is building for production. Catherine, starting with you, what's preventing production deployment today in your eyes?
Honestly, there probably are fewer blockers than maybe people assume. Right? So, we have partners in production that are extending on, that are essentially leveraging the existing rails and existing products, right? So cards are being issued, namely, right, to sort of like users who might be delegating purchases for agents. The gap is really in some of like the controls and building the trust. So that's where we're focused, is identity and accountability standards for agentic payments. But there are other considerations, right? Like not every transaction is well suited to card economics. There are still some transactions where keeping human in the loop more closely is important that we're implementing, and then straightening out identity and dispute mechanics as well is also an area of exploration and continued sort of development with partners.
Cool. James, what should builders start implementing right now?
All of our infrastructure. No, that's going to be the semblance.
We kept it neutral so far. We're all been very good so far, but now.
Yeah, I think at the end of the day, like the way I see agentic payments now is we have most of the infrastructure. Like the infrastructure exists out there in Ether, and is really about combining multiple of these services together to make like a comprehensive solution. So I feel like we have a lot of the seller side. So we have a lot of useful services. They've created their endpoints with MVP or X402 or name your favorite protocol. These exist, and agents can use them and transact with them today. And of course, we need to do that more and bring more people into this world. But it's still like, probably outside of our bubble, a lot of people are not actively delegating agents or a wallet to their agent, or even using an agent. There's still this ChatGPT, I prompt once and then I wait 5 seconds for a response. And so I think we need to get there and make better interfaces and better usage for agents to just scale this 10, 100x so we can grow this economy, because this is still, I think we all believe this is an exponential space. And once we find that right trigger point of more people adopting this and using this in a more scalable way, and a lot of our stack is all API driven, so it's easy to plug in to these different interfaces and even in backend services. So I think those are the main things that are kind of like stopping production, is how do you make this accessible to everybody and enable everyone to safely and securely have agents that has finance as a part of it.
Cool. Brendan, I have an easy one for you. What infrastructure decisions will age well?
What infrastructure decisions are going to age well? Oh man, I wish I knew, because I'd be making those. But I think the only safe bet, I think, like there's going to be a bunch of changes in the next few years, but open infrastructure, I think we've seen like over time, just like open source continuously wins, and building in public continuously wins, and lower costs and more control continuously wins. So I think the systems that are going to be able to adapt the fastest are going to be open, they're going to be well-defined, they're going to be small, and they are going to be low cost so that they can be very nimble in what is like a pretty tumultuous time in the payments and software industry, with a lot of stuff changing, a lot of opportunity.
Cool. So I have one last question before we actually move to the to our audience question. The question is, who is going to win the World Cup? Who wants to go first? I'm talking about the World Cup and football. Some people soccer. I personally bet on France, so I can go first. But
all my teams lost. It's been rough. Last week has been rough.
Okay. Cool. So actually, before we jump into the, we have some really good questions from the audience. Just before we jump into their questions, just wanted to share that with Utila, we've launched actually a brand new webinar hub on the Utila website. You'll soon find the recording of today's session there, along with previous episodes, speaker information, key takeaways, an announcement for upcoming webinars. If you'd like to revisit today's discussion, which I think was fantastic, or just explore other sessions, simply scan the QR code, which you can see, or visit utila.io webinars. Moving to the audience Q&A, we have like 5 minutes left. So we have some really good questions from the crowd. Starting from a question from Matt. The question is, we didn't plan the question. They're all organic. Is retail e-com really the largest opportunity here? What about conditional business payments? Where an agent decides when and how to pay based on FX rate, liquidity, cash flow, checkpoints. Benny, you want to take that?
Yeah, totally. No, I think I agree here. I think maybe the most exciting use case to me is these business to business payments, because like there's just a natural consumer adoption hurdle to doing any new payments flow. Like a lot of people, like, I don't buy flights on my phone because that feels weird. And like I'm a millennial and I need like the big screen and the computer. Like to get me to buy a flight via ChatGPT, like that's a whole different level. So I think the biggest thing and where we'll see is areas like these B2B finance flows where you can get a lot of leverage. I think as James said before about on the treasury side, on like the internal FX side of, okay, I know this is valuable. I know I can be saving my business a lot of money, but there's so many things I need to consider, so much research you need to do to get the best FX rate, find the best corridors that oftentimes you just don't do it and you're leaving a ton of money on the table. So I think that's one of the easiest places where you're going to see agents really become popular in the B2B context, because you can just say like, hey, get this money from here to here, find the most efficient path. And this is something that agents are incredibly good at, pulling a bunch of data sources, finding the most efficient paths and doing that programmatically. So needless to say, like this is the area I'm very, very excited about, making these FX APIs, making these routes open, programmable, agent addressable, I think is a huge opportunity.
Cool. We have time for a couple more questions. Question from Guy Peter to you, maybe James. So basically the question is, most stablecoins are deployed to blockchains that are limited to several thousands of transactions a second. What infrastructure is needed to support agentic payments, which will probably need millions, if not billions of TPS?
Soon. So yeah, this is something that we're definitely thinking about, is how do you service kind of internet scale economies? And I think if you look at like the global block space across every blockchain, it's fairly high capacity and we're constantly growing like Polygon mainnet now. However, I do think at some point you need something like an agent payment channel that scales, especially linearly, without like having exponential costs associated with it. And for the vast majority of use cases that we collaborate with partners on, this suffices most of their needs. So that's something that we're really focused on right now, is how do you scale in a linear capacity without ballooning a budget? Because most of the agentic payments use cases have an association to some party that you're transacting, whether it's a PSP or a merchant or a global SaaS business. And so that's definitely one way of how you can do this at a extremely, extremely small microtransaction compute, or it's even free. And you can just more or less add more servers in order to increase capacity.
Cool. So I think that's going to be a wrap. I really appreciate our audience attending, and you, Catherine, James, and Brendan. I think you took a complex project and I think you made the content really accessible, and I learned a lot also personally. So I appreciate your time, the audience time, and looking forward to chatting with you again, and see you in the next Utila webinar. So thank you, everyone, and take care.
Yes. Thank you, folks.
Thank you, everybody.